Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 13, 2023. U.S. equity markets experienced a slight pullback as traders awaited the release of the crucial U.S. inflation data and evaluated the impact of China's economic stimulus measures. After reaching their highest levels since April 2022 on Monday, the Nasdaq 100 and the S&P 500 were set for modest gains. However, Agribusiness Bunge Limited dropped in pre-market trading following its announcement of acquiring Viterra, backed by Glencore plc, in a stock and cash deal. In Europe, miners and tech stocks outperformed, leading to a partial decline in the Stoxx 600's rise. Investor confidence is growing that the upcoming U.S. Consumer Price Index (CPI) report will show a cooling of inflationary pressures, which could potentially pause the Federal Reserve's tightening campaign. If the CPI figures align with expectations, it would mark the first time the Fed forgoes a rate hike after 10 consecutive moves since March 2022. However, any unexpected deviation from expectations could trigger significant repricing and impact sentiment towards riskier assets. Pierre Viret, a technical analyst at Active Trades, emphasized the connection between the market's dovish expectations for the Fed's decision and declining inflation. He highlighted the potential for significant market reactions and sentiment shifts based on the CPI figures. It is anticipated that falling energy prices in May will offset increases in other categories, resulting in the headline index remaining relatively unchanged. Bloomberg's chief U.S. economist, Anna Wong, suggested that prices, excluding food and energy, likely rose by 0.3%, indicating a deceleration compared to April's 0.4% increase. While the market is still factoring in the possibility of a Fed rate increase next month, with swaps indicating additional tightening by the July meeting, investors chasing the recent stock rally have been selling bonds. Yields on 2-year Treasuries and UK gilts reached levels near those seen during the financial crisis, while the US dollar weakened. In the UK, there are indications that interest rates may need to move higher. April's data revealed unexpected tightening in the labor market, signaling that the country's resilient economy continues to resist efforts to cool demand and inflationary pressures. Traders have increased bets on the Bank of England's rate hikes, leading to a strengthening of the pound. Asian equities saw a positive trend, with a gauge of the region's equities rising over 1%, following reports that China is considering implementing broad stimulus measures. Investor speculation regarding potential rate cuts in China's longer-term policy rates also intensified after the central bank unexpectedly lowered its 7-day reverse repurchase rate. U.S.-listed China stocks experienced gains in pre-market trading, with Alibaba Group Holding Limited rising by 2% and Baidu Incorporated up by 4.7%. In other notable stock movements, Apple Incorporated slipped after receiving a downgrade from UBS Group AG, while Oracle Corporation rallied after reporting better-than-expected fourth-quarter results and providing a forecast for first-quarter revenue growth that exceeded analyst estimates. Bank of America Corporation's latest survey of fund managers revealed that investors are overwhelmingly favoring tech stocks, particularly in the field of artificial intelligence. The survey indicated that long big tech is currently the most crowded trade, with 55% of participants expressing this view, marking the highest conviction since 2020. Commodity markets witnessed a rebound in oil prices from their lowest level in almost 3 months, driven by hopes of China implementing stimulus measures. These developments also had a positive impact on iron ore prices. In summary, while stocks paired some gains amid anticipation of the U.S. CPI report and China's economic stimulus measures, there is mounting confidence that inflation pressures have cooled enough to potentially pause the Federal Reserve at new. With our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Stocks. The Stoxx Europe 600 rose 0.2% as of 10:40 a.m. London time. S&P 500 futures rose 0.2%. Nasdaq 100 futures rose 0.4%. Futures on the Dow Jones Industrial Average were little changed. The MSCI Asia Pacific Index rose 1.1%. The MSCI Emerging Markets Index rose 1%. Currencies. The Bloomberg Dollar Spot Index fell 0.3%. The Euro rose 0.4% to $1.0805. The Japanese yen was little changed at 139.55 per dollar. The offshore yuan was little changed at 7.1631 per dollar. The British pound rose 0.5% to $1.2569. Cryptocurrencies. Bitcoin rose 0.8% to $26,114.23. Ether rose 0.5% to $1,746.96. Bonds. The yield on 10-year treasuries was little changed at 3.73%. Germany's 10-year yield declined 2 basis points to 2.37%. Britain's 10-year yield advanced 3 basis points to 4.37%. Commodities. Brent crude rose 1.4% to $72.87 a barrel. Spot gold rose 0.3% to $1,963.20 an ounce. Cryptocurrencies continue to decline following the U.S. Securities and Exchange Commission's regulatory crackdown. Bitcoin dropped 1.2%, and altcoins such as Polygon and Chainlink also experienced losses. The SEC launched lawsuits against Binance and Coinbase and identified several altcoins as unregistered securities. The market capitalization of these tokens has decreased by $23 billion since the SEC's actions. Bitcoin dropped 1.2% to $25,827, while Polygon's Matic slid 2% and Chainlink's Link dropped 1.6%. The SEC filed lawsuits against Binance and Coinbase and identified altcoins like Matic, Solana's Sol, and Cardano's ADA as unregistered securities. A CryptoQuant index tracking SEC-listed securities declined by 28% since June 4, compared to a 4% drop in a Bitcoin and Ether combined index. Bloomberg states that sentiment remains shaky in the digital asset sector, leading to fund withdrawals by market makers. Binance's US-based unit will halt the use of dollars on its platform due to banking partners preparing to withdraw support. The market depth of Binance. US continues to deteriorate, but the outflows are smaller compared to the November FTX collapse. The total crypto market cap slipped to $1.09 trillion, and the biggest 100 digital tokens declined by 0.8%. Regulatory uncertainty over the classification of crypto tokens adds to investor jitters, as SEC Chair Gary Gensler emphasizes the need for registration and investor protection laws. Robinhood's removal of certain altcoins from its platform, following the SEC's enforcement actions against Binance and Coinbase, also impacted sentiment. There is a rotation of capital from altcoins into Bitcoin due to higher BTC dominance, but $26,000 remains an immediate short-term resistance level. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.